how to record income, expenses, asset, and liability. This is what we're gonna see today. How to record them, like your expenses, your asset, and your liability. How to record that is what you can see. But the three main topics that you're gonna see today is going to be about what you call T account, ledger, and debit and credit. We're gonna see those three topics today. It's going to be about T account, ledger, debit, and the ledger itself is an account or record used to store bookkeeping entries for balance sheet and income statements transaction. So I'm gonna show you the practice, the real practice, how that happen, how you do your T account, your ledger, and a debit credit. Remember, before we used to use paper, as I've been told you before. We used to record things, to calculate things in paper. But now with accounting, everything is different. This is not the same because everything is recording differently in what we call, as you can see there, T account, ledger, debit, and credit. So everything you need to record has a separate ledger. For example, I'm going to show you. You see, we have the rule one. We call that ledger, where everything has a separate rule. For example, if you need to record cash, you got a ledger for the cash. If you want to report income, you have a ledger for income. And then if you want to report expensive, you have a ledger for expensive. So we call that ledger. This one is a ledger. Anytime you want to record something like cash, you have a cash coming up, you have to create a ledger for it. Call that ledger. We call it as a cash. Anytime you got income, something coming up, you have to create what you call a ledger for it, for the income. You have your expensive things, money that you have been expend, you have to create a ledger for it. We call that a ledger. So remember, a ledger is an account or record used. This is the record. We call that the record used to store bookkeeping entries for balance sheet and income statement transaction. So that's the rule. That's the way you do it. You have the cash, where you prepare a ledger for it. You have an income, that's a ledger for it. And you have your expensive, you prepare a ledger for it. So that's the rule for it. That's the way you got to prepare to enter everything separately. Before, as I've been told you, everything used to paper. But with accounting, everything is different. A ledger will have two sides, as you can see. A ledger has two sides, as you can see there. We call that ledger, as I've been told you. Is the ledger. That's the way it presents. You have to show it. You have to do it in accounting. It has two sides. It has what we call debit, and it has another side called credit. Remember, I've been told you we're gonna talk to you about debit and credit. That's a T account. We see the definition about the T account, and we saw also about the ledger. Ledger, that's a ledger. It's represented, and now you see the debit and credit. So the ledger has two sides because all of them come to one thing. So the ledger has two sides, which is called debit, and just the side called credit. One side will record the increase. As you can see, this is an asset. For instance, you have your asset there. One side will match together. One side is going to be the increase, where the increase will go with the debit. And the other side will have the decrease, we go with the credit. That's the way. You're gonna ask me, why is like that? Why is the increase is debit and decrease is credit? That's the rule, guys. That's the way. Now, that's the way it's been doing. The other side will we call the decrease, as you can see, and this one is we call the increase. So the increase goes with the debit, as I just told you, and the decrease goes with the credit, and we call that the ledger. So in accounting, for people new don't know, that's the way it should be presented, and that's the way it should be done. But one thing to be noted: debit does not mean plus or increase, and credit neither does not mean minus or decrease. So therefore, it can be both. Debit can be a plus, it can be a minus as well. It depends where the ledger classify. It depends where it is. That's the way, guys. So remember, that's the way in accounting it has been presented that way. Let's just give a look on the debit and credit rule for example, for asset. For instance, no, as I just told you, debit, that's called increase, for it, and the credit, that's we call that the decrease. We're gonna look for. I'm just gonna give you the last thing. I'm not gonna confuse you because for a new baby, we're just gonna see, for instance, cash. Let's say that you have your business, something like in your business, you receive $500. Someone or you said or whatever happened, they give you $500. So that $500, you have to record it in what you call debit. That's the way. You don't put it on increase. You put it there on debit. Someone give you $500, or you have an asset for $500. People give you someone $500, or you sold something for $500, whatever. That $500 coming back, or you got a loan, someone from a bank. That $500 will be recorded in what you call debit. You put that in the debit side. Anytime you get asset, you got money coming up, it goes to the debit side on the ledger. Remember, we call that the ledger. That's a sign, that's a way, which is a record for account used to store bookkeeping. That's why we call ledger store bookkeeping entry. Is a bookkeeping entries. We call that ledger. So the $500 that you have been received goes to the debit side, which is increase, because on the other hand is called increase because it's money that you receive, but the whole goes to the debit. And then now, let's say that you sell something or you buy something for $100 from that $500. After you enter $500, that's your asset, go to your debit. Now, you buy something for the business, you minus something for the business, like $100, you buy something for the business, that $100 go to that side, we call that credit side. It goes to the credit side. Anytime you buy things or you put things out from your asset, that's your asset. Anytime you minus something, you buy things, it goes to the credit side. So you put the $100 there, as you can see here, because you minus, you buy things. You put it on the credit side, which is the decrease side on the other hand. So now, what you do, you're gonna calculate the whole to time, which is the both side now. That's the way you do your accounting for a business for something. Now you're gonna calculate both sides, the 500 and the 100, which is you're gonna say 500 minus 100. You see the 500, you put it there as your total minus 100. You got a closing balance. in a balance sheet for $400 left. That's the way. And then we can pay it. You can do whatever you want with it. That's your cash has been received. That's your cash that's been left. You just minus both sides, the 500 minus the 100, and you got a closing price for $500 left. So, my friend, that's the way. Remember, this class, as I've been telling you, has been present by Wi-Fi Stock Market, which is my company. So, and then Harry. So that's the way, my friend. So next time, I'm gonna give you more detail because you're gonna see all those ledger. We're gonna do a review in summary for next class. We're gonna add all those things. You're gonna see the cash, the bank, the property plant, how you're gonna put that. That's still same formula, same rule you're gonna be follow. Say way for next class. So my friend, don't forget, that's the way it's been present, as I've been to you. Today we have seen three things. We saw T account, which is an adjustment entry for accounting. And we saw the ledger, which is a record used to store bookkeeping entries. And we see how they been formulated to put there, which is debit and credit, where I showed you the cash. That's it. We call that the ledger. And they have rule one, which is the cash. That's the way you put them. You do your ledger, you have your ledger, and you put cash, your income in the ledger, expensive. And also, I showed you also, I taught you about the ledger, which is the debit side and the credit side. We have the increase side, we have the decrease side. And also, I've been told you, if you have an asset for $500, you add it on the debit side, not the decrease side. And whenever you buy something for the business, you minus something from your asset, you add it to the decrease side, and then you calculate your total balance, which is the closing price, which is the closing balance. That's the way you present to your boss, to your business. And there are more complicated things, but we just give you that as your appetizer, as a beginner. Please, we're gonna learn good thing because as I've been told you, in this channel, we are learning. This is Harry. If you like this video, do me first, subscribe, like, and share. And next time, we will talk about more stuff, as you can see, and we're gonna come up with all those things. Can be the same formula. You're gonna see more complicated things as we move forward. So, thank you in advance. It was presented by Wi-Fi Stock Market Variety videos. And as you can see, my website there is www.wifistores.com and check it. And this is my email address. So it was a pleasure to be with you guys. And see you. Take care. And we will talk next time. Take care. Bye bye. See you. See you.